back, everybody. Okay, now we're going to look at wedges. So we're going to understand what a wedge is, how it works, how we can use a wedge to guide us in our movement of the chart price action. So again, as always, risk disclaimer, make sure you pause the video or read the PDF. It's very important that you read that. Okay, so wedges, rising and falling. So let's just go through the slides and then we'll get into a little bit of a technical side of this. Wedges are multiple price wave reversal patterns. Okay, what this means in my own basic terms is that the price moves to a narrow space. Now, I'll show you by example, so we're just going to go through it, so bear with me. Just like a triangle pattern, but rather than move sideways, they can make good progress either up or down. They fall into two simple types, a rising wedge and a falling wedge. However, these patterns tend to indicate a reversal in price. So we are always looking for the breakout to go the opposite way to the price action. I know it might not make sense, but it will do. For example, we are looking for a falling wedge to break to the upside and rising wedge to break to the downside. So let's have a look at this. So here is what we would see on a typical chart. We're going to get into a little bit more technical aspects. So we can see that price at the top here, it tends to come down, it bounces off here, it comes up here, bounces off here, comes up here, bounces off here. And what we've drawn with our drawing tools, we have a trend line here and we have a trend line here. And we can see the gap between the first part to the gap that is now narrowing, which is the wedge. Okay, so it's wedging it in. And as it becomes narrower, the narrower it becomes, it's understood that the narrower it becomes, there is a chance that price is going to change. So in this particular falling wedge, and we call it a falling wedge because it's coming downward, when we get to this point here and we're getting, and the wedge is closing in on itself, so it's getting tighter here, we are looking for the price to break through this wedge into the upside. Then we will look to place our position and enter to the market. That is a falling wedge. Here it is with a chart. So we've got our candles in place. Here is a typical chart. We can see that here's our wedge drawn. We've gone from the top part here, we've drawn it down to the bottom part here, we've gone up here, we've come down here, and we can see that we can bounce, we bounce, we bounce, we bounce, and as that wedge gets narrower, we can see here that price, the candle wick, has dropped below that. We've come up, and we've broken that wedge. This is the breakthrough. So this would be our entry point for a long, and we can see that as that wedge got narrower, it's indicating that the buyers are starting to come back into the market. There could be a change in price direction. Do not be tempted to short the market at this spot here, even though that we can see that price has battled its way to the lower part of the wedge. Wait, be patient. Remember what I said before, don't be a gambler. Wait and see what happens with price. Once it hits here, look at that. And that's just a lovely move, a great setup to be had there just by using this wedge. Same chart, but this time we've got a fib for overall move to show the potential take profit levels. So here we are here, we've got our wedge in place, we've broken that there, and now we can see our levels. Now remember, with a Fibonacci, we have a sweet spot of 0.5 and 0.618. These are our sweet spots of the Fibonacci. And you can see that as prices come up, here is our level, our ceiling, our resistance that it's been hit. Then we come back down, we come up, we come down, we break here, we can see that we have a support level here, and then we break that 0.15, 618, and we continue into the high. Now, if we were taking out or putting our trade on here, we wouldn't want to go any higher than the 0.5. So now we're going to look at a rising wedge. Now, it's just the reverse of what we've just seen. We can see that we've got our wedge here. Price has come up, price has come down, price has come up, price has come down. And we can see that the wedge, the gap between the wedge here is narrowing. As that wedge narrows, what did I just say? there is an indication that price could change. Now, again, what we're looking for as it comes down here, we are looking for that break to the downside. Once it breaks to the downside, again, remember, we are looking for that wedge to narrow. That will give us an indication that price is about to change. Let's look at that rising wedge now. Remember, again, as a reversal, do not be tempted to go long, and we're going to look at this now. Here's our wedge. It's wide at this point here. It's narrowing as we move up, 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 and up. And we can see that the candle here, the wick has definitely broken. The wick has definitely broken. However, we could use that as an angled support, angled resistance line, and we can use this as an angled support line. What we're looking for is that as a wedge narrows, my God, you have to have your teeth in for this. We can see that we have the breakout, and here is our entry point here. Don't forget, we have a hammer candle here. We can see that the price is now taken to the downside, and we are looking to go short on the market. Let's look at this with the fib tool. How does this look? So there we are with the same chart. We've broken there. We've put our fib tool. Where is the sweet spot, everybody? Yes, it's the 0.5 and the 0.16. Look at price when it breaks from the wedge. It comes all the way down up there and stops at that 0.5 where we get a little bit of sideward movement. That special Fibonacci sweet spot retracement tool, fib retracement tool. We do not want to be exceeding that because we can come back up. We could probably from there and come back down again. We do not want to exceed that sweet spot. So a row for wedges, rising and falling. Okay, let's just go through this. When entering a stop loss, it needs to be above the last high if going short, or the last low if going long. Okay, the take profit levels will, as always, be previous structure. Look left for clues. Fib levels are the size of an opening of the wedge. As always, this will depend on the type of trader that you are and your choice. If the wedge fails and the price looks to have tested the pattern, then exit a small loss. The problem with this pattern it could continue and get smaller. Only wait until the breakout is confirmed before taking the trade. Confirmation is the key, okay? As with all patterns, make sure that if they are in your trading plan, stick to your trading plan. Always maximize your profits so that you can soak up the losses. Plan your trade, trade your plan. Remember, I cannot stress this enough. The trading plan and your rules of engagement, you must stick to it. Do not ever be a gambler. Thank you for taking time. I shall see you in the next one.